Hey, happy Thursday. We have big names, big tech earnings this week, and the Fed talking. What else could you ask for? We'll also, in our question of the week, we'll touch a little bit on how earnings actually impact stocks to give you a better idea of what this all means and how you can kind of prepare for what's going to continue to come out here soon. My name is Brandon Steele, financial advisor with Mainsail Financial Group, just here in Bellevue. Hope everybody is doing well here this week. Actually, last weekend I did a Woodinville run and wine 5K, and then had a little baby birthday. So it was a really good time, and kind of felt like normal life for once. So hopefully everybody has been enjoying the sun in the summer here so far, as we kind of move into August. So let's jump into things. And I want to start out by talking a little bit about the big earnings this week. We had Apple, Facebook, Google, Boeing, Microsoft, Tesla. We had Pinterest. I mean, you name it. I guess on top of that, Robinhood came out as an IPO as well. But anyway, the earnings were just, I mean, some of the biggest companies in the world and some of the biggest tech earnings in the world, which obviously have been a huge focus over the past few years. Not surprisingly, many of the tech companies crushed their earnings. I'll leave out Amazon on that. Right now, I think they're down about 5% in the after hours trading. We'll see how they open tomorrow. But a lot of the others really crushed their earnings, yet the markets really didn't do a whole lot. And the reason for that is because expectations are high. They were last quarter when we went through some of the earnings, and I know we touched on that as well. But think back to a blind date maybe that you had back in the day, right? Maybe something else that you had really high expectations for, but let's use the blind date example. Maybe a friend had talked them up a whole bunch, right? They were in your ear for the last couple of weeks or whatever it might have been. You were super, super excited, and then the date happens and nothing too exciting, right? Maybe it didn't live up to the expectations, but basically because of your expectations for that, your view on it may have been tarnished a little bit, right? Even if that experience was great, because you had such high expectations, you may kind of leave feeling a little bit down as far as what you had hoped for. So this is exactly what's happening with the market right now. And it happened last quarter to some degree as well, is that we have these just extremely, extremely high expectations for these companies and their earnings. And what we're seeing is that even though they are beating what we hear as far as a lot of the estimates, the markets aren't really reacting a whole lot because we just expect so dang much right now. Part of that's the big tech names, just the high flyers in general, but part of it's also where we're at in the economy after all the COVID craziness and the world opening up and all that good stuff. So we'll talk more about this here in our question of the week as we wrap up. I'll talk a little bit how some of these things impact earnings, but it's just interesting to watch because we just have these very, very high expectations, meaning these companies have to just be flawless in order for the stock price to kind of continue on this upward trend. Before we get to the question of the week, I want to touch on some of the numbers here this week. Monday, we had new home sales come out at 676,000, I believe it was, just kind of slightly less than expected. And then Tuesday is where we kicked off all this tech earnings. We also had consumer confidence come out, and the number was actually surprisingly good. It was about 129. And so even with this Delta variant and all the concerns and some of the market pullback that we saw earlier this week and late last week, consumer confidence numbers still seem to be strong. So something to pay attention to. Now, fast forward to Wednesday, just yesterday, we had Fed Chair Powell's press conference, and anytime Powell is on the mic, you want to pay attention. Unfortunately, this time there's not a lot to report. Basically, no surprise, they're still not moving rates, they're still not tapering. Didn't even hint at when they might. But the frustrating thing, I think, is that what's happened is a lot of the media is trying to get a little more clarity around this and find out what this substantial further progress means. The Fed time and time again has said that is what they're looking for to raise rates. Well, what is substantial further progress, right? And really, although this was asked very directly to Powell, he was very non-committal and very, very general in his answer. So we still have no idea what that really means. He did say that, as far as inflation goes, we're kind of where they want us now. But on the jobs markets, they're still looking for more. But that was about all he gave. So really interesting to pay attention there. And who really knows what the heck that means. But the other side of it is this inflation. And what Powell did share is that inflation is basically meeting their expectations and above their target. But I just don't know how they see this as expectations, right? If they were aiming for 2% and we're above that, is that fair to say that that's their expectations? I don't know. And then he had also shared his confidence in the fact that interest rates will go down. So I wanted to share my perspective a little bit on this, because what is new is this Delta variant. And the reason I bring this up is because part of the reason that we have some of these inflation concerns is obviously the increase in money last year with all the money printing and some of the stimulus that was passed. But part of it is also the supply chains, and there being a bit of a bog, right? You turn off this big machine of the U.S. economy, it's going to take it a while to pick back up. So we've got this kind of supply chain issue. Now, the Delta variant, the reason that's relevant is because when this has started to pick back up, it will have an impact. It's going to slow things down a little bit, as well as producers maybe slow down a bit in expectation of maybe a pullback in the economy. Not like before, hopefully, but this is how it goes, right? So to say that this is that they're confident that it's going to come down, I just don't know how they can say that fairly. And the other question is, well, okay, so maybe it does come down, but by how much? The Fed's kind of set up this win-win scenario by saying that that inflation is transitory, because yeah, sure, as these supply chain issues kind of work their way through, inflation may come down from where it is now to a slightly lower number, but still a high number. Now, again, how do you define transitory, right? So it's been interesting to watch. I think, I wish that the Fed would maybe give us a little more clear signals, because they aren't going to do anything until they give us, or they say they won't, until they give us a clear signal. So we may be a long ways out till we see any changes, but very important to watch. I thought the market honestly might react a little bit more to this, and they're up today, but not by as much as I thought. All right, all of that to also get to initial jobless claims, which came out today, which was about 400,000, but a very, very bad number came out, which was the GDP, which was 6.5%, well below the expectations. Maybe again a factor of the Delta variant. It's hard to say, but we had much higher expectations for that number, and so it's kind of disappointing to see that come through. Before we jump to the question of the week, coming up next week, we've got personal income, we've got spending, and the big one, inflation. Plus next week is the big jobs week, so we'll have ADP and non-farm payrolls come out as well. So really pay attention next week. Obviously, with the Fed's comments this week, the jobs numbers are going to be pretty important. All right, so as for the question of the week, it's very, very relevant as we move into earnings season here. And the question is, how do earnings really affect stock prices? And what I want to maybe share is to preface this is that really the stock price is already a reflection of those expectations, right? So when people are buying stocks, they're buying future growth or future cash flow is really how they're looking at it. So if somebody expects earnings to be, let's just be general here, be a high number, they may be willing to pay more for that stock in expectations that our future earnings, those future earnings will be higher, right? So again, what happens is if you have companies that have these very, very high expectations in their earnings, they have a very high hurdle to jump before that stock price will move. Now, if they exceed that, often you may see the stock price grow with that. If they don't hit those numbers, you may see stock price pull back because, again, the expectations for earnings moving forward are now less. Another big factor in this is the company's guidance. So not all companies provide forward guidance, but a lot do. And I think this is an area that drives a lot of the short term anyway, stock prices. A company could knock it out of the park with their earnings, but then share that they see some troubles ahead for their sales or whatever it may be. And you'll see the stock potentially pull back on that news because, again, you're buying in the future. You're not buying that company for what it's doing today necessarily. You're buying for what it might do a year, 10 years, 20 years, 30 years down the road, right? So I think this is really important and hopefully very helpful because just like last quarter, these earnings are critical. And the bar is very, very high. So as we're starting to roll through this earnings season, really pay attention to that. Hopefully companies will kind of beat like they did last time, although, even so, we didn't see a lot of market movement. So, it puts it in perspective, really, how this like macro environment has driven a lot. But now we need this micro, these companies to really produce in order to keep pushing forward. So pay close attention. Hopefully that is helpful. Join us next week. Again, we got a lot to cover next week, and also some more earnings to address as well. If you have any questions, just let us know. Reach out to me, send me an email, shoot me a message. Happy to answer them in our question of the week. And if we choose yours, we would be happy to send you a copy on us for coming up with a great question. We'll see you next Thursday at 3. Have a great weekend.